Good morning and welcome to this morning's session on investment in Pittsburgh, looking at trends and highlights over the last decade. I'm Rich Lunak, President and CEO with Innovation Works, and we're happy to be one of your hosts, along with my colleague, Leon Hoffman.
Yeah, great to be with you all this morning, and thanks for joining. My name is Leon Hoffman. I'm the managing partner for EY here in Pittsburgh. And I would be remiss not to thank the great team at IW as well as EY for all the work behind the scenes, I'll say, in making today possible. So with that, you'll see there was a lot of work put into this report, and we've got a lot of great news to share today. And that's the one thing I want the group to walk away with, is that we've got an incredible story to tell right here in Pittsburgh in terms of our technology investment landscape. So with that, I'll segue into some of the headlines. If we could go to the next slide, please. Great. So some of those headlines, first and foremost, in terms of investment, when you look at Pittsburgh in 2021, there was $3.6 billion invested in our tech landscape here, which is just absolutely incredible. That's actually up tenfold from about $330 million when we started this back in 2012. So just tremendous growth you see. And that growth has been spurred by a number of investment firms. You can see here that we've had the great fortune of over 300 firms making investments here in Pittsburgh companies, and actually 16 of those making their first investment in 2021, which is fantastic. And we've talked about this for those of you that have participated in previous sessions. We've talked about the great benefit we have of having really some world-class universities here in our backyard. Carnegie Mellon, University of Pittsburgh being just two of them. And those universities here in Pittsburgh have attracted over $11 billion of federal research, which really just helps the ecosystem here in terms of patent generation. We'll certainly touch upon that a bit here momentarily. And then I like to look a lot at exit proceeds, because I think that tells really the success of the companies that we have here in Pittsburgh. And you can see that 21 billion, actually over 21 billion of exit proceeds over the last 10 years. And really that speaks in of itself to the successful companies that have started here in Pittsburgh. So just great news all along. And if you move on to the next slide, Jane, maybe just to double click for a minute on that big investment number, which, as you can see here, is about 10.5 over the last 10 years. And when you look at it closer, it's 8.8 of that actually over the last 5 years. So back to what I said at the outset, clear momentum, right? Over 85% of that funding coming in over the last 5 years really tells a story that we have something to be proud of here in Pittsburgh, and Pittsburgh is certainly on the map. We'll talk a bit later too, as well as in terms of where that funding's going, the type of companies. But I think the takeaway will be that it is a broad group of sectors that you'll see that are attracting that investment. Jane, if you wouldn't mind moving to the next slide. So as promised, we'll get into some of the data, and we're going to go through this quick because we've got some great panelists here to share their stories later today. But as I mentioned before, 2021 record year for dollars invested in Pittsburgh technology companies, as you can see here, close to $3.6 billion. Certainly the benefit of a handful of IPOs, but what I like to look at is the other sources of investment. You can see that here in terms of venture capital, angel, corporate, and seed funds continue to show a great deal of momentum. And the next slide actually covers really the way that we look at investment, which is a 3-year rolling average. And we've been doing this for 10 years, so we have the good fortune of having a significant amount of data that we use when we pull this together. And we really think looking at a 3-year average is important, because in any given year, you certainly can have a transaction or two that may skew the results. But the data here is undeniable, right, in terms of the momentum that Pittsburgh is experiencing. You can see that in terms of a 3-year rolling average, so the last 3 years of investment, you can continue to see that ramp up to 2.5 billion in 2021, which again speaks to the momentum that we have here in Pittsburgh. Jane, if you could advance the slide, great. So this slide really, I think, gives us a sense as to I'd say the depth of the tech sector here in Pittsburgh. And what you see here, it's a busy slide, but what you see is two important data points. One is the line you see there, which is the number of unique companies funded here in Pittsburgh. And you can see in 2021, we set a record and slightly over 2020 with 172 unique companies funded. So that means that they're unique, right? The 182 that you see below in 2021, that number is higher because some of those companies received multiple rounds of funding throughout the year. You know, I think again the takeaway here is that you're seeing funding from a lot of different sources. You continue to see that upward trend, which again I truly believe is a reflection of the great companies we have here in Pittsburgh. Move to the next slide. Okay, this slide covers specifically venture capital funding. We thought it would be helpful to just provide some additional detailed perspective. And you know, what you see here is two data points. One is the average VC round size, and you can see that 2021 at $10.6 million is the second highest on record. And again, I think that speaks to the attractiveness of the companies here in Pittsburgh, as well as the maturity. You know, the higher that number gets, obviously, the higher the valuations are, the more advanced the companies are, so on and so forth. So I think that certainly speaks to the companies that are calling Pittsburgh home. And then you can see there on the line chart over the last 3 years, 59, 56, and 56 in terms of venture capital deals. And those numbers over the last 3 years are up significantly over the previous 7 years, which again is a great sign of the health here in Pittsburgh. Next slide. So the next two slides I'll cover relatively quickly, really look at that sector diversity. And the first slide is in terms of dollars invested. And again, a ton of data, I promise you that. And I think we delivered on that. But in terms of 2021, what jumps out at you here is probably what you would expect, right? That the hardware and robotics sector attracted the most dollars of investment, 65%. But if you turn to the next slide, what you see is really, it's much more than autonomous vehicles. And what you see here is this actually is the number of unique Pittsburgh companies that have received funding. And this paints a much different picture, right? You can see that life sciences, you can see software, and certainly autonomous, which is included in hardware and robotics, plays a big part. But those three sectors actually make up close to 90% of the number of companies receiving funding here in Pittsburgh, which again speaks to the great diversity we have here in Pittsburgh. So with that, I was going to turn it over to Rich.
Thanks, Leon. And I appreciate the partnership with your team and hard work and everybody putting this together. So local venture capital, as we know, plays a really key role in our local startup community. And this slide shows the estimated uncommitted capital by our local venture funds. You'll notice a slight uptick in 2020. However, it's still relatively low, keeping in mind that an average US venture fund is much higher than the amount of dry powder we have. So certainly an area we'd like to see increase over coming years. One very encouraging sign was that we've actually had some new venture funds launch here locally, including 412 Venture Fund, Blue Tree Capital Group, Black Tech Nation Ventures, Magarac, Reinforced Ventures, and more. Several of these funds are still in fundraising mode, so they've not done a final close on their funds. So I think that bodes well for the coming years, and hopefully we'll see that number go up. Next slide. Exits, as Leon mentioned, are a sign of a healthy ecosystem. They create liquidity for the investors, and they also create the wealth and experience for entrepreneurs who may turn around and become angel investors, or better yet, serial entrepreneurs launching new companies. Over the last decade, we've had 129 exits, generating more than $21 billion in proceeds. And in 2021, we had 20 exits with $65 billion. Keep in mind, the term exit doesn't mean these companies leave our region. It means that there's a liquidity event. And in most cases, these companies stay in our region. In fact, if you look at a lot of our large multinational corporations with large and growing offices here, like Amazon, Microsoft, Smith and Nephew, IBM, and others, they're here because they acquired local startups. So these are actually good news for our economy. Notable exits this past year are IPOs for self-driving autonomous vehicle company Aurora and language tech company Duolingo. And then we saw exits with Confluence Technologies, Centria, and others that you'll learn about in our report. Next slide. As Leon mentioned, we've been attracting more and more investors from around the globe to Pittsburgh deals. In fact, over the last decade, we've documented over 300 venture investors from around the globe investing in our deals, including 16 first-time funds in 2021. Those included such notable firms as Tiger Global, Ubiquity Ventures, and also our own local fund, 412 Venture Fund. Once these firms make investments in Pittsburgh, typically they have a partner coming into town for board meetings and other meetings with the companies. And I think it's easier for them to meet other current firms and potentially make new investments. So these are all really good trends. Next slide, please. Our analysis also looks at how Pittsburgh compares to other metro areas in the country, notably the top 40 metro areas. And you may know Pittsburgh is the 24th most populous city in the US. Over the last decade, we've ranked 14th in rounds per capita and 17th in dollars per capita. And this slide shows that in 2021, we ranked 17th in deals per capita. So in general, I would say we are punching above our weight. Keep in mind, in order to do an apples to apples comparison with these other metro areas, we only use PitchBook data for this analysis. So a lot of the corporate investments, the data around angel rounds and some of the other rounds that you saw in previous slides are not used for this comparison. And candidly, I think if that data was included, would probably do even better than this. Next slide, please. As many of you know, our regional universities are key sources of ideas, talent, and technologies for our startup community. We try to track the research investments going into our local universities, and over the last decade, it reached $1.4 billion in 2021, a record over the period we were tracking. Next slide. Regional research institutions, though, as I mentioned, churn out a lot of this IP and license it to either startups, founders, or major companies. So this next slide looks at both the patents as well as the licenses, options, and other agreements executed. A good sign here is the growth of 179% over the last decade for patents, which is really impressive. And then, as you see, we've had a slight downtick over the last 2 years in licenses and option agreements. But rest assured, our local research universities are doubling down. Interestingly, one piece of data not covered in this presentation, but is discussed in our report, is the large influx of corporate R&D offices by major tech companies like Google, Amazon, Microsoft, IBM, and so many more in our region. And I'd refer you to our report, but that's another very healthy trend. Next slide. But really, the story behind this is not the data, but really the founders, entrepreneurs, and investors making things happen. And so we have a section where we have quotes and feedback from a lot of these. This slide has a quote from billionaire entrepreneur and business person Thomas Tall, saying, "I'm driven by the innovative work here in Pittsburgh that companies of all sizes are undertaking, and look forward to seeing their impact on a global scale. That's pretty representative of a lot of the encouraging remarks that so many of these founders and investors have made. Next slide. So I would say in summary, the past decade has showed a lot of impressive momentum, as Leon alluded to earlier. We've had growth in most areas, including investment growing tenfold. And 2021 was a very strong year with a number of IPOs and records in so many of the statistics. So I hope you have a chance to look at the report. One last item. InnovationWorks is partnering with Carnegie Mellon University for our annual AI and Robotics Venture Fair. If you're an entrepreneur in these sectors and would like to apply, please go to the link here. Would love to consider your company. This is open to any AI and robotics company, whether you're from Pittsburgh or out of town. And in addition, we look forward to hosting any investor that's interested. So with this, I'm going to turn things over to my colleague, Ven Raju, who's the Chief Investment Officer of InnovationWorks, to lead the next section.
Thank you, Rich. Thank you, Leon, and the IW and EY teams for putting forth a comprehensive overview of technology investment in the region. As noted, this marks the 10-year anniversary of the report, and in my view, the trends serve to reaffirm the region's evolution from an industrial powerhouse to a burgeoning technology hub. It's quite remarkable in terms of the trajectory of the trends. As many in the audience know, Rich Lunak, CEO of InnovationWorks, is retiring later this year. Rich has played a pivotal role in furthering the regional tech ecosystem. And as a community, we are deeply grateful for his service and continued service to the region. As Leon and Rich noted, we have two very distinguished panelists today to help better understand technology investment in the region at a unit level, and through the unique lens of a founder and an investor. As many of you know, Rimsys was founded to help medtech companies manage and navigate the regulatory pathway with their cloud-based platform. Rimsys today counts the likes of Siemens, Johnson & Johnson, Novartis, and others as clients. In 2021, Rimsys closed a $16 million Series A financing led by Bessemer Venture Partners, with ALOS and Private Opportunities and InnovationWorks as part of the syndicate. Please join me in welcoming James Gianoutsos, founder and CEO of Rimsys, and Andrew Hedin, partner at Bessemer Venture Partners, for a panel discussion today. Welcome, James and Andrew. It's great to have you here, and very much looking forward to the panel discussion. Perhaps, James, I'll turn it over to you. We'd love to hear the backstory on Rimsys, the origin story. How did you come up with the idea? How has it evolved since?
Sure, and thanks everybody for inviting me to this opportunity to speak today and talk a little bit about my own personal experience with Rimsys. And you did get the name right, Gianoutsos. That's great, and certainly appreciate that. So how Rimsys was really founded was, so I spent the last 16 years in quality and regulatory industry in the field within medical device. And throughout that tenure, I worked at companies like Philips, so Respironics up the street in Monroeville here. Worked at Respironics before it was actually acquired by Philips, and then several small, medium-sized companies. Knew quite well that the large enterprise company was not for me. So went off to many startups around the Pittsburgh region. A few of those are Carmel Therapeutics, Coherent Medical, Circadience, for those that are familiar with that space. And an interesting thing happened at my time there, that the entire time I was working, there was always this issue of managing and organizing regulatory data. And this was across the board. This was across the board of enterprise level customers or companies and small and medium-sized companies. And so if the small, medium, or the big guys can't do it, the small and medium guys don't have a chance at it. And something very fortunate happened. I was actually laid off of my job on May 31st at 12 p.m. And there was some revenue issues with the company, and so they left half the staff. And at 1 p.m. that same day, I started my consulting company. On May 31st, 1 p.m. in 2017, and immediately got a client the next week. And about 3 months later, had enough funds to start putting some ideas and money into my idea, I should say. And from there, started getting some peer reviews based on some things that I was just doing from a idea standpoint, just generating some assets just to even talk about it, just to know what I was talking about. Hired an India firm out of Kolkata, India, to help create a proof of concept, and went out to Vancouver, British Columbia in 2018 for a conference, and presented my idea and got my first client, which was Siemens Healthineers. And so it was an extraordinary event that didn't really anticipate it going to the way it has, which has been very fortunate for us. But it's been a long and very crazy time, and a very fun time at that.
Oh, what a story. Take us back to perhaps pre this Series A. How did you think about capitalizing Rimsys? And how was it initially capitalized?
Myself, and I shouldn't say myself, I should say my family. My wife was very supportive, and it was where really at the end of the day I was using the proceeds from my consulting company to really further this idea. So I was taking a portion of that, throwing it in the investments of building this idea, getting that feedback. And so from there, once I got some credible feedback that, hey, this thing is an actual, not just an idea, but something that could be used practically in the field, and then open up a credit card, and then I use my personal credit card for that. Then I used my consulting business credit card to help with that. Then took out a line of credit, and then started, as I started getting revenue, I would pay a little bit of that down and then reinvest in the business. And it was this fine line between going into extraordinary amount of debt and keeping my marriage alive. But no, for real, it was challenging, for sure. Folks always say that you always put you put your money to work, and it's an investment at the end of the day. And if you truly believe in your idea and get the credible feedback that it is a great idea and something that can be used practically in industry, it's that much more, you get that more confidence that you're doing the right thing, and hopefully you're betting on yourself at the end of the day, and hopefully that'll come to fruition.
Did you have any early outside investors?
Yeah, so we had my very first investor was actually a colleague of mine who invested $50,000, and I don't know how, but I convinced him to invest in the company. He was a colleague of mine that was also in regulatory affairs and saw firsthand the challenges that he was facing. He was a consultant, and he bought into the idea right away, and we exchanged a $50,000 check in Panera Bread up in Robinson Township. And to this day, I don't know how I did it, but I couldn't believe I had a $50,000 check in my hand and deposited it. And I just knew from that day on I had to get him a return on that investment. And so that was the first angel investor. And then we got further investment through Pittsburgh Life Sciences Greenhouse. Innovation Works was a very early investor in us, which has been fantastic to work with. And Private Opportunities was another one that was technically a pre-Series A, but they saw the challenge. They knew the industry, knew the environment around not just Pittsburgh but elsewhere, and believed in me and the company and the idea and the ability to take this not only to a local type of company, but a global company for that matter.
So you've essentially seen the full life cycle from an investing lens, from bootstrapping to early angels to now institutions.
Yes.
That said, let me hand it over to Andrew to get a sense of, Andrew, valuation. I don't need to tell you, valuations are at an all-time high. You have alternative asset players coming into early stage investing. The lines between seed and A and later rounds of growth are blurring. With that backdrop, how do you think about early stage investing? What key parameters do you look at? I'd love to get a better sense of how you think about the environment as well as
Sure.
deals that you're seeing.
Yeah, absolutely happy to. And it's an honor to be here. Thanks for having me and highlighting the Rimsys story, and in particular highlighting James and his story. So thank you for having me. As a multi-stage fund at Bessemer, we invest across the entire spectrum of stages of companies, from seed through growth equity, and have seen the dynamics that you're mentioning, Ben, at the later stages. And so last year, I actually intentionally moved my focus to earlier stage seed and Series A investing. So, as an individual partner at a larger fund, I decided to focus on seed and Series A investing because that's where I thought I'd be able to generate the best returns for our limited partners who invested us. And so that was an intentional move on my end. But some of my colleagues, saw a lot of opportunity in later stage. And so as a firm, we're investing across that spectrum still. And, at the earliest stages in early stage investing, I think there's two questions that are really important to me. One is, why is now the right time to be building a company in this particular space? And then why is this team the right team to be building and executing on that vision? And I think those two questions are really, really important at the earliest stages for me to build conviction around. And, in Rimsys' case, I think both were, absolutely true and, rang very true to me. Beyond that, depending on the stage of the company, some companies we invest in are pre-product, earlier stage in their customer journey. But for companies that are at the stage of Rimsys when the Series A happened, we're evaluating the market opportunity and the dynamics. So is it a large enough opportunity for us to have a meaningful return given the size of our fund? Why does this team have a unique advantage in building in this space? And from a product perspective, what's the durable right to win? So not only why are they winning today, but why will they continue to win and execute not only this year, but over the next 3, 5, 10, 15, 20 years. And so that tends to be really important for us. Beyond that, as a firm, we're what we call roadmap driven, which is a word we use as sort of a euphemism for investment thesis driven. And so for all of us internally, we try to create investment theses across different areas and understand the dynamics of that market. We study the market pretty deeply, understand who the players are, who the best companies are, and what that opportunity ultimately will look like, and why now is a really interesting time to be investing in that space. And so that helps us build conviction at the earliest stages that we have a view on the market, we have a view on the market opportunity, the customers, why they're making decisions, what's important to them. And then we can make an investment that's relatively early stage with some level of conviction that there's a really big opportunity to go after.
That's very helpful. On that note of roadmap, James, how did you think about the Series A raise? What was the inflection point, or was it out of necessity where you said, look, we have sufficient traction here, we're hitting the requisite milestones, we're ready for that large institutional player to come in? When did that happen, and how did that happen?
Yeah, I think a lot of that happened with our seed and our quote unquote seed investor by Alice Ventures, and having an early partner like that to help navigate the waters of the VC environment, the fundraising environment, and knowing when to go out for additional funding and what to really look for, what they look for out of a business really at the end of the day. And so our number one goal has always been to build a sustainable company that's capital efficient, that can hold its own, right, without the need for venture capital money. Granted, that's something that has always been ingrained in me from day one. Is this has to be something that can stand up on itself. And the idea to even go for venture capital was that we had a significant pivot in our strategy, meaning that we originally were dedicated to the small medium-sized market for medical device manufacturers, and soon, all the big companies started coming after us and just, seeing what we were doing and got really, really interested in us. And so to have the ability to scale like the way that we needed to scale to be able to support those type of customers, that was a critical moment where we said that, okay, we need to get some additional partners and really start this process of looking seriously at a Series A and going and finding the right partner for us for that cause.
And walk us through that raise process. We have a number of entrepreneurs and budding entrepreneurs in the audience here. How do you go about raising institutional capital? At least how did you go about it?
I went in there with an idea of what it was like. It came out with a completely different idea of what it truly was like. And it was interesting to say the least that, it was, our original seed rounds, I went out to, I think, 75 different VCs, angel investors, private equity, things of that nature. And there were some interested, some not. And it primarily came down to, where they wanted to invest their money, and how confident they were as an organization to support us as a business. And I would say that it was some of the highs that I've had, and definitely some of the lows that I've ever felt with the company, because you're out there, selling yourself, selling your soul, not selling your soul, but this is who you are, as a business, as a person, and you keep getting these, rejections or maybe things of nature of, okay, we like this, but not this, right? And you can't but help to take that personally, right? As a founder, as somebody who's spent so much time and effort and money and put their heart and soul into something. And it's natural as a human being to feel rejected. But as I thought about it, it was more around not the business, but sometimes how I told the story or how somebody reacted to the way I was telling the story. And I would start picking up those cues and start rearranging some of the slides of how I would present the information or tell that story. And, as a founder, you have to be moldable in terms of how you tell your story, right? It was almost like I was blaming them for not being interested in us, right? Because I was so proud of what we were doing. But at the end of the day, I had to kind of frame it a little bit differently, because the number one thing that folks said was they don't want to be in the medical device space, right? Sometimes that's just a no-go for some investors, right? And it wasn't. And I think the way that I was telling the story was it was perceived that we were kind of in that medical device, creating medical devices, but it wasn't. It was a vertical SaaS solution serving the medical device industry. And I had to just change the way I told the story, change the way that I, refine little things here and there. And at the end of the day, what it all came down to was finding the right partner. And I almost wish, going back, that I wrote down exactly what I wanted out of a partner, who I wanted to, spend my time with as a, with a VC or with Andrew, right? It's not just necessarily about the name of the VC. It's also who you're dealing with from a board perspective. And, as an entrepreneur, all I wanted was, like, give me the money, I'll do it. I'll make something happen, right? But it was so much more than that it was just a learning. It was a very big learning curve for me, because I'm an operational regulatory guy. I'm not a sales guy, but I very much had to learn how to sell myself, how to pitch myself, how to tell the story in a compelling way. And when we talk about this partner fit, right? It was almost like, if I can expand and get myself out there as much as possible, somebody's going to bite, right? But what it ultimately came down to, wish I knew previously, was I really needed a focus of who I wanted on a partner. Who's in the space of what companies or what VCs fit this solution that we're in, or this market that we're in. Who has the experience to help us build this company as we grow? Who has networks, who has the knowledge around that? Because what I've learned is that there's a lot of folks that are interested in us and you waste a lot of time giving them information about your company. And I just thought, hey, I'm just gonna throw everything at you. If you like it, great. If not, great, we're gonna go to somebody else, right? But at the end of the day, that took a lot of time away from the business and myself and my family. And you just need to be very focused into what you're doing and how you want to proceed forward. And I wish I knew that a year ago, right? But fortunately, through that effort, we found Allos Ventures, we found Bessemer Venture Partners, and we very much aligned with their portfolio, what they were looking for, where they were seeing the need, and where they wanted to put their money to work, and it very much aligned with us as a business and as an entrepreneur and a founder, and the vision of the company where we wanted to go as well. And so I would say is a definitely a learned lesson. Take the time, know who you want to invest in, find the investors that are in your space, and just don't go out there searching for everybody in anything. Don't just look for money, right? Because that was the biggest lesson learned. I think I found is it's not just the money, it's the partner, it's who is there to going to be support you a long way down the road.
You spoke a lot about fit, and perhaps could you get into the mechanics of fit? What attributes did you look for in prospective investors? Was it exits in that vertical? Could you give us a sense of kind of the filters you use to identify investors that
to me, it didn't matter about the exits. It mattered about who understood us. And I found that 99% of the folks out there didn't understand us. And I would know within about 5 minutes of the conversation if they did or didn't. Everybody perceived us to be a healthcare information technology company, or an actual medical device company, or something that was just, we're doing software for medical devices within, embedded firmware or hardware or software or whatever the case may be. But it was really about them understanding us and us getting a really good feel for, do they really understand our space? Because if they don't, then I'm going to be spending way more time just even talking about it. And at the end of the day, if they don't have a good idea of the fit, they're not going to feel comfortable investing in us, and we're not going to feel comfortable with them as a partner. So that's first and foremost, that was the biggest thing. And then it would also be the size of the company comparatively to where they typically invest. And so for us, we were X amount ARR over a couple of years. And it, from my experience, and Andrew could probably speak better to this, but they have, firms have a very specific window that they can or cannot invest in. And they have a thesis where it's you fit in this box. If you're not in that box, just from a pure investment standpoint, certainly there's nuances and outliers and things of that nature, but you have to be very clear that this is where we are as a company. This investor is where they invest in at this stage, because if they're a growth company or something, or a growth fund or something else, they're not going to be interested in us. They might be interested in us just to get our information to say, oh, this might be a space we want to go into later on. But you have to be, again, really diligent of the folks you work with, the VCs that are, where they invest their money, and make sure that's a true alignment from that standpoint. And it's not to say that VC is not an alignment down the road or a good fit down the road, but at this stage where we are as a company, you have to make sure you're comfortable with both ends of that. I don't know, Andrew, if you had any thoughts of
Makes a
that.
lot of sense. Yeah, no, Andrew, could you pick up the story from there? How did you connect with Rimsys? How did Rimsys connect with you? Could you perhaps speak to that a little bit?
Yeah, well,
What perked your initial
yeah,
interest?
absolutely. And James, I hope you still feel good about the partner relationship.
For sure, 100%.
After,
Yes, I wanted
after
to
several months
Gianoutsos,
working together.
yeah, for sure.
Yeah, no, so Bessemer, we're a pretty large fund, and we have a decent sized team relative to some other VC funds. And so we have about 45 investment professionals across the globe, across 7 offices, 20 partners across those 7 offices. And we have a team in New York of folks who are outbound sourcing on our behalf. And so I believe the initial connection was actually through my colleague Craig, who is based in New York City, had been working with me on vertical SaaS businesses focused on the healthcare industry, and had reached out to James initially. And he had a first conversation with James, and I believe Brad, your co-founder, also, and had a really great conversation. So Craig flagged it for me, saying, "Hey, this might be a fun one to work on together." And as I heard the story from Craig, that piqued my interest initially. And so then we took a next call together and worked on the process from there. I'd say a couple of things that piqued my interest. So first of all, as a firm, we've had a lot of experience in vertical software, vertical SaaS, and had a lot of success and been fortunate to be part of really great stories of building really meaningful businesses. And what some people or some firms have looked at as areas that are too small to build in. And we've just seen that the TAM often is a lot bigger than you expect it to be. And if you build the best product in the space, you have a really strong advantage relative to a lot of other players in those vertical SaaS industries. And so we're predisposed to like the business model that Rimsys had. Separately from that, as I talked about the investment thesis and the roadmap driven philosophy we have, Rimsys fit on a roadmap for us. So we had been looking, for the last many years for companies that are digitizing core functions within the life sciences industry, medtech included. And only recently has cloud computing enabled these technologies to exist. And for better or worse, the healthcare industry is a little bit behind some other industries in adopting newer technologies. And so we felt like there's still plenty of opportunity to run and build product and build software solutions for this industry that can really meaningfully change how those businesses do their job. And as I heard the Rimsys story, there was a very clear why now. So why is now the right time to be building in this space? Just given some of the regulatory changes that are happening in the EU and China and elsewhere around the globe, we built conviction after talking to industry experts that they can no longer rely on their processes that they were doing previously. So a lot of the processes historically were done through spreadsheets and consultants, as James knows way better than I do. But given some of these regulatory changes that James and the team highlighted for us, and as we dug into that, it became really clear that that's going to be an insufficient approach, and they're going to need to adopt technology going forward to do their core function. And so we became big believers in that thesis and the thesis that James and the team had, and felt like there's a really strong opportunity there. Beyond that, given where the team was, the metrics were just really impressive. So we are a relatively metrics-driven firm. There's an incredibly strong growth last year. There's an incredibly strong pipeline of potential customers. Very efficient growth that gave us conviction that they could be really have a really strong growth story going forward and build in a really powerful space. And then Ven, at the beginning you mentioned some of the great logos that the company had already achieved on seed funding, which is really unique to us relative to some of the other companies we see at this stage. It really spoke to the quality of the product, the fact that these large enterprise businesses are relying on Rimsys at this stage was really, really powerful. And we talked to some of those customers and heard wonderful things about the team, the product, the way that it was changing the way that they're doing their business, and that spoke a lot to us. And then finally, James, you talked about your background, and as I met the rest of the team as well, it was just so obvious to me that no other team in the world is going to build a better product for this space than James and the team. And so that resonated really strongly with us.
That's great. Walk us through the process, Andrew. What happens after that first conversation with an entrepreneur? Help us better understand that from your lens.
Yeah, and so I've been at 2 different funds now, and I think every fund and any entrepreneur in the room will realize that every fund does their process slightly differently than others. At Bessemer, we're relatively independent and decentralized in our decision-making process. And so what it looks like for us, at least, is after Craig and I got on the line after that first call, we regrouped and we said, wow, this is actually really interesting. Let's spend some time here. And so, we created a diligence list of things we wanted to dig into and understand, what is the market opportunity? Why is Rimsys the best company in this space? And what is the potential for this business from here? What are all the ways this can go really well? What are the ways that this might not go as well as we hope? And how do we calibrate the risks associated with that? And so that led to both primary and secondary research that we were doing over weeks, spending a lot of time with the team, meeting other executives at the company, and just making sure we understood various aspects of the product, the market, the sales and marketing engine, and everything else from there. And as we continue to build conviction, what we ultimately do is we then have the team come in and present to the broader Bessemer team and broader partnership. And so James and Brad came in and presented to some of our partners, and we got feedback from our partners about areas that they want to dig into. But really, because we were a fairly decentralized team, the decision came down to me and Craig to move forward. And so we had our own level of conviction and put together a term sheet and presented to James and negotiated that, and then ultimately came to an agreement from there.
Yeah, that's great. James, let me hand it over to you. So, Andrew's interest is perked. Bessemer says we want to continue the discussion. What did you feel? How was it thereafter from the entrepreneur lens? I'd love to get a better sense of that.
For sure. And I would say that as a founder and as a business owner, you want to do the best for your business as possible, right? And in order to do that, you're also dating other people, Andrew. And sometimes that's the name of the game, and just making sure that you feel comfortable. And the best position to be in at that stage is to have to not just be with dating one VC, but dating several, and just understanding kind of where that is at,
or something.
Yeah. And just because you want to do the best for your and have options, right? When you go build a house, you want to get 3 quotes from different contractors, right? When you in something so personal to you, you want to make sure that you're understanding each partner as best as you can. And again, it's not just about the firm, it's about the partner and the person that you're going to be dealing with from a board standpoint, from a discussion standpoint. You're going to have frequent conversation with them. They're going to give you a lot of great advice around throughout the process in post Series A as well. Where do you put your money to work? How do you put your money to work? Where do you invest, either locally or geographically? How do you expand your product? How do you expand just globally in that instance? And so number one, it comes down to making sure you have various opportunities, channels to go with, and then making sure that the terms are sufficient and agreeable from both ends. And 3, and I think more importantly, is who you're going to be working with. And I would say that without a doubt that we certainly had some other opportunities, but it ultimately came down to Andrew, and having him be that partner. Certainly the Bessemer name helps, but at the end of the day, it really comes down to them understanding you and your vision and where you're going as a company, because you're going to have a lot of good and hard conversations as a founder moving forward of where this money is going to go.
Yeah, that makes a lot of sense. Let's, before we open it up for Q&A, let's talk a little bit about post-investment. Andrew, how do you guys generally support companies after investment? How involved are you? Does that vary as a function of company profile? Could you perhaps speak to that?
Absolutely. So it's a At the highest level, I'm as involved as a company wants me to be involved. I recognize that we're minority investors in almost all of the businesses we invest in. We don't run the business. James and his team have the privilege of doing that, and our goal is just to support them in all aspects where they want support, and just help them, given the experiences we've had as a fund over a century of investing, of sharing best practices and where we can be helpful. As someone who focuses a lot on healthcare, I sometimes talk about the Hippocratic oath of investing, where the first role is to do no harm, and so that's my primary goal, is not to get in the way and prevent the business from running well. But beyond that, we do have a team that helps support our companies. We have a couple of folks who help with hiring and recruiting executive talent across the company. We help with benchmarking, showing the company where we see best in class businesses across all geographies, and helping make sure that we're pushing the team to think about what is it going to take to look like a phenomenal business. Connecting our portfolio companies to each other and the executives across many different functional areas. And so we not only connect our CEOs together, but we connect our CTOs, our chief revenue officers, our operations folks, our finance folks across 8 different functional areas to just, we kind of get out of the way as investors and let those teams talk to each other and share best practices and, ask questions of each other across the 200 portfolio companies we have. We have a set of advisors who help our companies, and so occasionally we'll tap into chief revenue officer who's been really successful in their career to talk about best practices and sales comp or whatever it might be. Over time we've been fortunate to be part of a lot of great M&A and IPO stories, and so helping our teams think through what that looks like, and sharing practices there. And then I just try to be, hopefully a first call relationship where I want to hear when things are going well. I want to hear when things are challenged, where I can potentially be helpful. If I don't have an answer, is there a way I can get to an answer for the team and help them answer any questions that they might have? And then, finally, as a relatively large fund, the fund we're working out of is a $2.5 billion fund. We can grow the business over time. And so we're in a fortunate position that, we can start with a modest size check in our view, but that's our typical first check. And then hopefully, if the stars align, continue to grow with the company as they grow and they need more capital.
That's very helpful. James, one last question for me here. So, you have the right partner, you have the requisite funds. What tell us about forward looking, how you're thinking about the business, what you're investing in, and kind of where you see the business here in the near term and midterm.
Yeah, for sure. And I would say that after we once we got married with Bessemer, it was fantastic. It's been a fantastic relationship, and it was the number one reason we chose Bessemer, was just because of Andrew and that expertise, and just the way that and just how he, and the philosophy of how to help the business, and giving it up to us to really run it with support obviously from them. And there's nobody better that understands our business than us, right? And it's again, I will go back to that partner and having that right partner. And after that Series A closed, it was all happy, and then we're like, oh crap, what are we going to do with all this money? And where are we going to invest it, and how are we going to invest it, right? Certainly we had a plan for that, but I think reality clicks in real quick, because that's the most money you ever see in a bank account, right? And you enter a different phase. It's different challenges and harder challenges at the end of the day, and they're good challenges to have, but it's how do you now we're going to have to hire, we're going from 28 employees at the end of 2021 to potentially 80 by the end of this year, depending on how we continue to invest. And having that, the infrastructure needs to be in place to build a company. So we're going to have we have an HR department now. We have the director of talent acquisition. We have an entire marketing department. And I would say that this is not easy to build it and scale it the way we are, because you're literally building the foundation to even scale further down the road. And you got to do that now, or else you're just not going to be in a good position down the road, 12, 18, 24 months down the road to scale the way that we anticipate we're going to scale. And so number one, it's investing in the people, our people, geographically, certainly in Pittsburgh. I'm Pittsburgh born and bred, and it is a passion of mine that I'm very proud to be a Pittsburgher, and it's something that I want to make sure we continue to do and retain talent here locally. Certainly with COVID, it's an interesting time because you're not necessarily geographically bound anymore, but the primary focus certainly is in the Pittsburgh region and building that up. And so number one, investing in the people. Number two is investing in the product, making sure that it's sustainable, scalable, making sure that it meets the quality from our customer expectation standpoint. And then three is geographic growth. So growth in terms of dedicating certain markets, whether it be the EU or the US or South America or the ASEAN market, whatever the case may be, but trying to figure out where the best approach to go in that and be strategic about it. It's not just let's go out there and start selling and do everything. It's very, from day one, we want to make sure we're still capital efficient, right? We want to make sure we're using our money wisely. But there's also a lot of structural things that I knew were going to be challenging, but when you get into it, it's a challenging time because you're building those processes that never existed before. And so it's just, I think we're actually past that now, which is fantastic. It took about a quarter to do. And we're really in a position now to expedite that growth and be in a better position moving forward. So
that's exciting. I know we have a lot of great questions here, so I will turn it over to my colleague, Jane Joseph, to moderate the Q&A.
Thank you, Ven. Hi, everyone. I'm the Digital and Community Engagement Manager here at IW. Thank you all so much for pre-submitting questions via registration and also dropping them in the chat. I am aware we are approaching time quickly, so I will ask as many as I can in this short amount. The first one is actually to Rich. Of all of the trends you've seen in the tech entrepreneurial ecosystem in your tenure, which trends have excited you the most?
Probably two things come to mind for me immediately. One is, Pittsburgh's always been a place with a lot of great university-based technology, but not always a big corporate tech community. And I would say the growth of the number of global corporations in the tech world that are now have large offices here and are growing, many from their acquisitions of startups, is really encouraging to me. And those would be companies like I mentioned earlier, Google, Uber, Microsoft, Bosch, Smith and Nephew, et cetera, et cetera. I think it's legitimizing our tech scene. I think it's adding a lot of talent and capabilities. Over the short haul, I know some of our startups complain about competing for software talent with Google and things. I think that's a short-term problem, but over the long haul, this is going to benefit our community. So that would be one. And I would just say on almost every other aspect, just seeing whether it's the number of grassroots organizations, service providers, angel investors, having been part of this tech community for 25, 30 years, just seeing how that's evolved and in so many ways, those would be the two things off the top of my head.
Perfect. And James, this is actually a personal question that was submitted via chat. Who inspires you? Do you come from a family of entrepreneurs or are you a first generation entrepreneur?
Yeah, so interesting. My grandfather was our family actually immigrated from Greece, and I am third generation now, but my grandfather had a painting company, like all Greeks, and it was called Gianoutsos Brothers, and he actually painted all of the bridges of Pittsburgh. And then my father inherited that business. And then he was a commercial painter. So he painted like Children's Hospital and bridges, and worked for my father as well. And then my my other side of the family, from my mom's side, William Frizzell, he was actually the director of the Steel Union Association. And so he actually was responsible for putting the Bessemer furnace in Station Square, and his name is actually on that. And so kind of coming full circle, I guess it was having Bessemer as a true partner for us, really resonated home for me. And at the end of the day, it was the right fit. It was the right partner. Andrew was definitely the right person to help build this company and continue our growth here in Pittsburgh. So
That's incredible. Definitely sounds like fate here.
yeah.
Okay. So for my next question, it is for the founders that may be in our session right now. And I'll start this with Ven, but anyone who has comments, please feel free to jump in. How can the information from our investment report be used for a startup's fundraising strategy?
Well, to the extent that, a founder wants to speak to the vibrancy of the region, the access to the talent pool, the legacy within the region in terms of how companies have been started here and grown. I think some of this data can be leveraged towards that end, but James is probably in a better position to answer that question than I am in terms of how he leveraged the Pittsburgh and Pittsburgh ecosystem as he was on the fundraising circuit.
I reach out to all my networks. It seems that Pittsburgh is a close-knit community, and somebody knows somebody that has dealt with fundraising or before. I mean, I went to a CMU event where we pitched in front of students, and they gave us feedback on it. We were invited to a few other events where met some folks at Alpha Lab, and definitely had some opportunities to meet go to different events at Innovation Works or Pittsburgh Life Sciences Greenhouse, and really just getting involved as early as possible, as much as possible, just to meet as many people as possible, because again, somebody's going to know somebody, and if you have a compelling story, you have a compelling business, you're going to have that opportunity to be introduced and to find the right fit, hopefully find the right fit for that particular entrepreneur.
The one thing I would add to the discussion is just, if I'm an entrepreneur who's looking to raise money, we give a list of the 300 firms over the last decade that have invested here. And so those are the firms that have shown an affinity for the Pittsburgh market. It's obviously in their geography. They probably have partners that may even be coming here on a regular basis. So a network. Also, there's a great list of representative deals. So if I was a vertical SaaS company, you could reach out to somebody like James and ask him about, the fundraising process and what sort of metrics people were looking for the round. And maybe it's even talking to him about his earlier rounds, some of these angel rounds and things like that. So I just think it can give you just a lot of information and insight. And then, for the passionate, driven entrepreneur, just to network off of that and make things happen.
Yeah, I would second that and welcome that. And I would just say that, as an entrepreneur and a founder, it can feel lonely sometimes because you really don't know where to go or what to do or even who to go ask. And I think just keeping that open and honest communication in that network available to you helps tremendously from a business standpoint, and honestly from a mental health standpoint, just making sure that you are, just to know you're doing the right thing, because you're second and third guessing yourself at every step of the way, and just having that network support system is crucial. And make sure you also fall back on your friends and family too, because that's the most important.
Great. Okay, we're going to close out with one more founder-focused question here. When pitching a seed round investment, I've heard that we also want to explain and show how we will attract and close the next round. Is this true? And I'll open this for anyone.
Close the next round after like a Series A, so to a Series B. Like how do we get to a Series B?
It sounds like during the pitch for seed round investment, they feel that they also need to explain how they will attract and close later investments.
So maybe I can answer this.
Yeah, I mean,
yeah. So from my end, I just want to invest in a great company and a great team, and especially at the seed stage, it's a really big bet on the team. With that said, at the time of the seed, we are going to be looking at what does the path of this company look like going forward, and we want to believe that based on the amount of capital that the company is raising at the seed stage, they're going to be able to hit some milestones that help de-risk the business over time. And by de-risking that business over time, it's going to be easier to raise future capital rounds. And so, I've never had a seed round where they've explicitly said, we are going to raise the Series A that's going to then look like this size, and this is the valuation at that point in time. What they will say, though, is over the course of this seed, over the next 18 to 24 months, these are the really important milestones we believe we need to hit to continue to de-risk the business for us as a business, build further conviction from our own team and the story, and why we have that durable right to win, as I talked about. And if you hit those milestones, we believe on the investor side, that would then lead to a successful Series A. The Series A is not the goal, though. The goal is to build a really sustainable and great business. And so, just showing that you're thoughtful around, what are the ways that you need to build the business in the near term, and just continue to, expand that business is really what we're focused on, not the milestones for the purpose of the Series A alone.
Great. What a great discussion. What a great entrepreneurial story and journey. And thank you, James and Andrew for joining today. And thank you to Rich and Leon for presenting a comprehensive view of the ecosystem. This was fantastic, and we look forward to great events coming to fore over the course of this year, and hopefully we can do them in person. Thank you so much, everyone.